Well, we're going to have a sovereign debt crisis, a currency crisis, a financial crisis that's worse than '08 with no bailout. It's not just that a bank fails, but it means that depositors at these institutions will lose money.
Are you ready for the biggest economic crash in history? Do you think the 2008 financial crisis was bad? Well, you haven't seen anything yet. According to Peter Schiff, one of the most outspoken and controversial economists in the world, the next crash will be much worse than 2008 and will wipe out the savings, investments, and retirement plans of millions of people. In this video, we will explore why Peter Schiff thinks that the crash is inevitable, what will cause it, and what you can do to protect yourself from it. Peter Schiff is a well-known financial commentator, CEO, and chief global strategist of Euro-Pacific Capital. He's a frequent guest on national and international news shows and is known for his provocative views on the U.S. economy, the U.S. dollar, and the Federal Reserve. Schiff rose to fame for his accurate predictions of the 2007-2008 financial crisis, which he warned about years before it happened. He argued that the U.S. housing bubble was unsustainable and that it would burst, triggering a collapse of the banking system and a deep recession. He also predicted that the Fed would slash interest rates to zero and print money to bail out the banks, creating massive inflation and devaluing the dollar. He advised his clients and listeners to invest in gold, silver, and foreign stocks to hedge against the coming crisis. Schiff's predictions turned out to be accurate. The housing bubble burst, leading to a wave of defaults and foreclosures. The banking system collapsed, requiring trillions of dollars of bailouts and guarantees from the government and the Fed. The Fed cut interest rates to zero and launched several rounds of quantitative easing, expanding its balance sheet from less than $1 trillion to over $8 trillion. The dollar lost value against other currencies and commodities, especially gold, which rose from around $700 an ounce in 2007 to over $2,000 an ounce in 2020. However, Schiff's prediction of inflation did not come true. Despite the massive money printing by the Fed, inflation remained low for most of the past decade. The official Consumer Price Index, or CPI, averaged around 2% per year from 2009 to 2019. The core CPI, which excludes food and energy prices, averaged around 1.8% per year in the same period. Many economists urged that inflation was not a problem because of various factors such as globalization, technological innovation, demographic changes, and weak demand. Schiff was unrelenting in his views, insisting that inflation was much higher than what the official statistics show. He claimed that the government manipulated the CPI by changing its methodology and excluding items that rose in price. He also argued that inflation was hidden in asset prices such as stocks, bonds, real estate, art, and cryptocurrencies. He warned that eventually inflation would spill over into consumer prices and erode the purchasing power of the dollar. Despite the criticisms he's faced, Schiff remains a respected authority in the financial world. He continues to advise his clients and listeners to diversify their portfolios and invest in assets that can withstand economic volatility. While some may disagree with his views, it is undeniable that his predictions have had a significant impact on the way many investors think about the economy and their financial futures. And he may have been right after all. In 2020, as the COVID-19 pandemic hit the world economy hard, the U.S. government unleashed an unprecedented fiscal stimulus of over $5 trillion to support household, businesses, and state and local governments. The Fed also ramped up its monetary stimulus by cutting interest rates to zero again and buying $120 billion worth of treasury bonds and mortgage-backed securities every month. The combined effects of these policies was a huge increase in the money supply and a surge in demand. As a result, inflation started to rise sharply in 2021. The CPI jumped from 1.4% in January to 5.4% in June, the highest level in 13 years. The prices of commodities such as oil, gas, lumber, and copper also soared to multi-year highs. The bond market reacted with a sell-off, pushing the yield of the 10-year Treasury note from 0.9% in January to 1.7% in March, the highest level since January 2020. The stock market, however, remained resilient, supported by the earnings growth of large tech companies and the prospect of a strong economic recovery. Peter Schiff remained skeptical of the Fed's ability to control inflation and avoid a financial crisis. He argued that the Fed had created a bubble economy based on cheap money and speculative investments, and was trapped in a vicious cycle of printing money. Schiff also said that the U.S. government was bankrupt and could not solve the problem of inflation by cutting spending or raising taxes. He argued that the U.S. government was spending way beyond its means and relying on borrowing and printing money to finance its deficits. He argued that the U.S. government was also facing huge unfunded liabilities for entitlement programs such as Social Security, Medicare, and Medicaid, which would explode in the future as the population aged. He argued that the US government was, therefore, stuck in a policy of perpetual spending and borrowing, which would only increase the debt burden and the interest payments. Schiff also said that the US dollar was doomed and could not retain its status as the world's reserve currency. He argued that the US dollar was losing value and credibility as a result of the Fed's inflationary policies and the US government's fiscal irresponsibility. He argued that the US dollar was also facing competition from other currencies, such as the euro, the yen, or even cryptocurrencies, which offered more stability and security. He argued that the US dollar was, therefore, losing its demand and its dominance in global trade and finance, which would only hasten its decline and its collapse. Schiff's conclusion was clear. The US economy was heading for a disaster worse than 2008. He predicted that the crash would be triggered by a loss of confidence in the dollar and the Fed, which would lead to a run on the dollar, a spike in interest rates, a plunge in asset prices, a wave of defaults and bankruptcies, a surge in unemployment and poverty, a breakdown of social order, and a crisis of political legitimacy. He predicted that the crash would be followed by a period of hyperinflation, depression, and chaos. Peter Schiff's warning about the US economy's impending doom seems increasingly plausible. The fiscal and monetary stimulus, coupled with structural problems of excessive debt, entitlements, and trade imbalances, could lead to a perfect storm of inflation, default, and currency crisis. The risks are mounting, and the consequences could be dire. So, what can you do to protect yourself from this nightmare scenario? According to Schiff, there are only two options: leave or prepare. If you can, you should leave the US and move to another country that has a sounder economy, a stronger currency, and a freer society. If you can, you should prepare for the worst by diversifying your portfolio, reducing your debt, increasing your savings, stocking up on essentials, and learning new skills. One of the best ways to diversify your portfolio is to invest in gold and silver. Schiff believes that gold and silver are the ultimate safe havens against inflation and currency debasement. He believes that gold and silver will preserve their value and purchasing power when paper money becomes worthless. He believes that gold and silver will soar in price when investors flee from fiat currencies and seek refuge in real money. He believes that gold and silver will be the best performing assets in the coming crisis. Another way to diversify your portfolio is to invest in foreign stocks. Schiff believes that foreign stocks will outperform U.S. stocks in the coming crisis. He believes that foreign stocks will benefit from stronger economic growth, lower debt levels, higher interest rates, and more favorable exchange rates. He believes that foreign stocks will offer higher returns and lower risks than U.S. stocks. He believes that foreign stocks will be especially attractive in emerging markets such as Asia, Latin America, or Eastern Europe. Invest in yourself. One of the best assets you have is your skills and knowledge. By investing in yourself, you can increase your value in the job market, create new opportunities for income, and enhance your satisfaction. You can invest in yourself by taking courses, getting certification, learning new languages, or developing new hobbies. You can also invest in your health by eating well, exercising regularly, and managing stress. Investing in yourself can help you cope with the challenges of a financial crisis and improve your quality of life. Build a network of support. Another valuable asset you have is your network of friends, family, and colleagues. By building a network of support, you can access resources, information, and advice that can help you navigate a financial crisis. You can also offer your support to others who may need it. You can build a network of support by staying in touch with your contacts, joining professional or social groups, volunteering for causes you care about, or mentoring others. Building a network of support can help you feel less isolated and more empowered in a financial crisis. That's all for today's video. We hope you enjoyed it and learned something new. If you did, please give this video a thumbs up and share it with your friends. If you want to see more videos like this, please subscribe to our channel and hit the bell icon to get notified when we upload new videos. Thank you for watching.